What should you do when the market hits record highs? The first thing we talk about is the fear of highs. A lot of investors naturally have the fear that when markets hit new highs, which you can't avoid it. You hear it on the news, you hear it on social media, you look at the major indices, and it's clear when they hit new highs. That can present a lot of concern with many investors. It's now the right time to invest. Am I going to invest and then lose my shorts because the market's going to go down shortly after? And it's a natural fear to have. And obviously, at the end of the day, no one knows what the market's going to do. It can go up, it can go down. As an example, we talked about how the S&P 500 has hit 1,400 unique individual highs since 1957. So that kind of puts in perspective how many times the market has hit highs in the last
68 years.
We talked about the cost of waiting. Biggest cost of waiting is sitting on cash and inflation, eroding purchasing power. Also, we talked about how missing just the 10 most crucial trading days in the equity markets can account for your rate of return severely, even cut in half over a period of a couple decades. So being out of the market just for a quick stint of time, because you're trying to wait and time it properly, can severely reduce your average rate of return over a long period of time. So that's one of the hidden costs of waiting as well. We talked about how market timing usually doesn't work for most investors. I can't time the market accurately, at least not 100% of the time, and that's not what we recommend doing anyways. Even the professionals, the CFAs, the portfolio managers, the hedge fund managers, they try to time the market and they can't do it consistently time in and time out. And then Tim did a great job of talking about some strategies to ease the fear. So some of the most common ones that we talk to clients about, and that are some of the most historically proven strategies to help mitigate is now the right time or the wrong time to buy, is dollar cost averaging, diversification, and focusing on your plan. If you have a plan, should weather the storm, whether the market's at highs or if it's at lows. And we talked about clarity and discipline over guesswork. And we also talked about you shouldn't be asking the question of, is the market at an all-time high? But you should be asking, is my plan able to weather the storm, whether the market's at a high or a low? And if you can implement those things and you can focus on the course and the plan, I think you can tee yourself up for the most success possible. Obviously, there's a lot of variables and unknowns that will always present themselves.
That's awesome. That was really good, dude. Yeah.
Thank you.